This week was one of those weeks where if you were checking the market every day, your mood probably changed every few hours. Because just when it looked like the whole market was about to get dragged down again by oil, war headlines, and global fear, suddenly sentiment flipped, and by the end of the week, markets were looking much stronger, much calmer, and honestly a lot more confident than most people expected only a few days earlier. So the big question now is very simple, and this is what I want to talk about in today's weekend update. Was this just a temporary relief rally after a panic phase? Or are we now looking at the beginning of a more durable recovery across stocks, crypto, and risk assets? Because if you step back and look at what actually happened, the biggest thing that changed was not earnings, it was not some major economic miracle, and it was not suddenly that all macro risks disappeared. The real reason markets bounced was that the biggest immediate fear in the system, which was the war and oil shock story around Iran and the Strait of Hormuz, cooled down enough for traders and investors to breathe again. That is really the core of this entire week. A lot of people only look at the index number and say, okay, NIFTY up, nasdaq up, Bitcoin up, so everything is bullish again. But markets do not work like that. First you have to ask what was causing the fear. Then you ask whether that fear is still there. And then you see how much of that fear has been removed from prices. And this week, clearly, a lot of fear got removed. NIFTY closed around 24,050, up strongly on the week. Sensex also had a solid recovery. Bank Nifty bounced back nicely. In the US, the S&P 500 moved back above 6,800. Nasdaq climbed toward 22,900, and even Bitcoin moved back above 72,000, which tells you that money was not hiding anymore. Money was again willing to move into risk. At the same time, if you look at volatility, that tells the story even better. India VIX dropped sharply. US VIX also cooled. And whenever you see that combination, markets rising while volatility falls, that usually means panic is being taken out of the system. Now, of course, the reason that happened is because the market started believing that the worst case scenario in the Middle East may not happen immediately. We got a ceasefire window, strikes paused, expectations of some reopening in Hormuz, and suddenly oil, which had become the biggest fear indicator in the market, stopped behaving like a runaway panic trade. And that matters a lot more, many people think actually. Because when oil spikes hard, it does not just affect petrol prices or airline companies. Oil is one of those macro variables that starts touching everything. If oil stays very high, inflation risk comes back. Then central banks become cautious. Then bond yields get more complicated. Then growth stocks come under pressure. And then risk appetite weakens across the board. So when oil cools, markets immediately start pricing a more comfortable environment, even if only temporarily. That is what happened here. You can think of it like this. Last week, the market was asking, what if this gets worse? This week, the market started asking, what if the worst is already behind us? That shift alone is enough to create a strong rally. But now comes the important part. And this is where I want people to stay balanced. Because I do not think this is a time to become blindly bullish just because the last few sessions looked good. This rally is healthy, yes. It is real, yes. But it is still a rally built on risk removal, not yet a rally built on deep conviction that everything is fixed. There is a difference.
If you look, you can still see that the system is not fully relaxed. Oil is down from the worst levels, but it is not cheap. Gold is still elevated. Headlines from the region can still change the mood quickly. Hormuz may be less stressed now, but not fully back to normal. Trust between the parties is still weak. So, what the market has done is not fully priced in peace. It has simply priced out the most extreme panic. That is why I would describe this week not as all clear, but more like breathing space.
And honestly, that breathing space was badly needed because markets had become too stretched emotionally. Fear was high, people were overreacting to every headline, social media was full of doomsday calls, and once that kind of panic builds up, even a small improvement in the backdrop can trigger a much bigger move than people expect. That is why the rally felt so powerful. Look at the sector behavior and you can understand the mood even better. Tech started leading again. AI related names looked better. Semiconductors looked better. In India also, the rebound was broad enough to show that investors were not just hiding in one or two defensive names. Even crypto joined the move, and that is always an interesting sign because crypto usually tells you very quickly whether risk appetite is returning or not.
Bitcoin above 72K is not just a number. It is the market saying that the immediate global fear trade has reduced enough for speculative capital to step back in. At the same time, energy is no longer the star it was during the panic spike. That also makes sense. When oil panic comes out, energy loses some of that emergency premium, while growth and cyclicals start breathing better. So, in a way, what we saw this week was a very classic macro rotation. Fear down, oil down from panic highs, volatility down, tech up, crypto up, broader indices up. That is a healthy relief pattern. Still, I want to repeat one thing in a slightly different way because I think this is the most important message for the weekend. A relief rally can be strong, it can be tradable, it can even last longer than people expect, but it becomes a truly trusted trend only when the underlying macro stress continues to improve. Right now, we are not fully there yet. So, how should we think about next week? For me, next week is not mainly about some big, complicated economic theory. It is again about a few very simple things. First, watch oil. If Brent and WTI remain contained and do not start climbing aggressively again, that is supportive for the current rebound. Second, watch geopolitical headlines, especially anything around Hormuz, Iran, Lebanon, and the weekend talks. Third, watch whether markets can hold gains instead of giving them back quickly. Because one thing I always look for after a relief rally is not just how high the market goes, but how well it holds when the excitement cools down. That tells you whether buyers are real or just emotional.
In India, I think this rebound has improved the mood clearly, but Nifty is still not back at old highs, so I would not call it full strength yet. In the US also, S&P and nasdaq have recovered nicely, but they still need to prove they can build on this move. So for broad investors, I think the right mindset is optimism with discipline. Not panic, not greed, something in between. And for people who are watching their portfolios every day, this is also an important reminder that market direction does not change only because one headline looks scary. Many times what matters is whether the scary thing keeps getting worse or whether it starts getting less bad. This week, markets responded to less bad. That was enough. So, my weekend takeaway is this.
This was a good week for the bulls. Fear came down, oil stopped behaving like a crisis signal, volatility cooled, stocks bounced, crypto participated. That is all positive. But the market is not completely out of danger. It is simply in a better emotional and macro position than it was a week ago. So stay alert, keep watching oil, keep watching the headlines, and do not confuse relief with certainty. If calm continues, this rally can absolutely run more. If stress returns, markets can again become choppy very fast. That is the environment we are in right now. And honestly, that is why this market is so interesting. Because 1 week ago, everybody was talking like the system was breaking. And now, suddenly, people are again talking about breakouts and recovery. That is the market. It humbles fear and greed every single time. If you are also watching how this story develops day by day, follow me on X at Zalwora for my fastest real time market commentary. And subscribe here on YouTube for deeper weekend breakdowns like this. Thanks for watching.